Matt, the Mortgage Guy, Mortgage Mondays, episode 115, where I'm talking HELOC versus refinance. Matt, the Mortgage Guy, Mortgage Mondays, episode 115, where I'm talking HELOC versus refinance. Now, I'm making this video because I'm getting tons and tons of questions on this subject. As most of you know, we've seen quite a bit of appreciation. Tons of folks in California and really throughout the country have a lot of equity in their homes. They need to access that for a number of reasons. They've got credit card bills they'd like to consolidate. They've got kids going to college. They've got medical bills they need to pay. Whatever it is, they are accessing the equity in their homes to do things. And I think I saw a stat, something like 1.8 million home equity lines of credit in 2018 alone. You pair that with the cash out refinances that are going on, and I bet the numbers are pretty staggering. Anyway, to look at those two products and figure out which one is best for you, it's always best to talk to someone you like and trust on your specific scenario. Because there's tons of scenarios. I'll go over a couple today, but it's really going to be scenario specific on which one fits you best. As a mortgage professional, I offer refinances. I don't do home equity lines of credit, but I refer plenty of them out because they are the best option in a lot of circumstances. In other circumstances, the refinance is what works best. And here's some general things that I'll talk about that may help you decide. But again, like I said, reach out to someone you like. If you're paying off a small amount of debt, or you just need a small amount of capital for something else, and your first mortgage is a good mortgage without mortgage insurance at a low fixed rate, then a home equity line's usually your best bet. If you're saying, hey Matt, I've got $11,000 in student loan debt and it's 9.9%, I want to get rid of that. I'd like to do a cash out refinance. And we look at your first mortgage and it's a fixed 3.75%. Doing a cash out refinance doesn't make sense. If you really want to do anything, one plan might just be to pay that aggressively and get it paid off. If you can't do that, you just say, hey, I'm going to take out a HELOC at a lower percentage, pay that off, and have got a plan to pay off the HELOC, then that might be it. Other scenarios where a refinance might make sense is you call me and you've got equity in your home, you don't know which one to do, and we look at it and we go, okay, when you bought the house with 5% down, you had a $232 a month mortgage insurance payment on there. Now that the thing's appreciated, we could do a cash out refinance, reduce that mortgage insurance since you've got 28% equity in it now, and if the rate is going to be in the same range, you're probably going to save money even with taking cash out on a monthly basis because of the fact that you have mortgage insurance on there. So scenarios like that where a mortgage makes sense. It's really all dependent. Some of the pros and cons, speaking in generalities about the two, are with a cash out refinance, you've got a fixed rate payment and you've got one payment. HELOCs can be variable rate. There are some fixed rate products, but a lot of them are variable rate. You always can write off the interest on your primary residence when you do a cash out refinance. The HELOCs, I'm not an IRS auditor or an accountant, but are not always tax deductible, that interest you pay on the HELOC. So you have to check on that. Some of the cons of a cash out refinance are their closing costs, whereas a HELOC is going to be a really minimal fee, if any. There's going to be title fees and lender fees associated with refinance. So there's pros and cons to both. It really depends on your specific scenario. But what I'll tell you is feel free to reach out to me or somebody you like and trust who's either a mortgage professional or in banking and has some HELOC knowledge that can really guide you on what's the best bet for you. Any questions at all, please feel free to reach out. Until next time.